Gold's global power shift. A quiet transformation is taking place inside the vaults of the world's central banks. It's not a new digital currency or a political decree that's driving it. It is something far older and more elemental. Gold, the ancient metal that once backed the global economy, is reclaiming its place in the modern financial order. And as this shift accelerates, analysts are starting to wonder if we're watching the early stages of gold overtaking the US dollar as the ultimate store of value. For decades, the dollar's dominance has been unquestioned. Nearly every nation on Earth has depended on it for trade, debt settlement, and reserve stability. But in the shadow of rising inflation, record debt, and geopolitical tension, cracks have begun to show in that once solid foundation. Central banks, especially in emerging economies, are quietly preparing for a world where reliance on the dollar may no longer feel as safe as it once did. Their weapon of choice, gold. The numbers tell a powerful story. Just a few years ago, gold made up less than 15% of total global reserves. Today, that share has climbed dramatically. By most estimates, gold now accounts for around 20% of reserves worldwide, officially surpassing the euro to become the world's second largest reserve asset. Some more aggressive analyses suggest the figure may already be closer to 30%, marking the highest level in modern history and signaling a deliberate shift away from paper currencies. This surge didn't happen overnight. In the wake of recent crises, from pandemic stimulus to mounting global debt, central banks have been stockpiling gold at a pace not seen since the 1960s. The move has been strongest among nations like China, Russia, India, and Turkey, which are seeking to shield themselves from dollar volatility and Western sanctions. Each new shipment of bullion represents more than a trade. It's a statement of independence. At the heart of this growing fascination lies one bold calculation: $5,790 per ounce. That is the theoretical price gold would need to reach for its total global value to equal the dollar's share of global reserves. It's not a forecast or a dream, but a mathematical benchmark, a glimpse into what parity between gold and the dollar might look like in today's monetary landscape. To reach that level, gold would have to more than double from current prices, a scenario that would send shockwaves through global finance. Most major banks, including HSBC and Goldman Sachs, see gold rising into the $4,500 to $5,000 range in the coming years. Not enough to dethrone the dollar, but enough to confirm this is more than a passing trend. They point to inflation, debt saturation, and the erosion of trust in government-backed assets as key drivers behind gold's renewed strength. But the $5,790 figure captures something deeper. It symbolizes a potential turning point in the world's financial hierarchy. If gold ever reached that level, it would represent not just a price milestone, but a reordering of confidence. A moment when nations decide they trust the permanence of a metal more than the promises of a government. In an era where currencies can be printed, frozen, or devalued overnight, gold's appeal lies in what it cannot do. It cannot default, vanish, or be created out of thin air. Critics argue that central banks will never allow gold to challenge the dollar's supremacy. Yet the data suggests otherwise. The very institutions that once moved away from gold are now its biggest buyers. Central banks purchased over 1,000 metric tons last year alone, one of the largest accumulations in history. The message is clear: they're preparing for uncertainty. They're diversifying not because they want to, but because they have to. Still, it's important to understand what this shift means. The dollar isn't disappearing. Its liquidity and global trust remain unmatched. But what's changing is the foundation underneath it. The silent insurance policy countries are rebuilding through gold. If the dollar represents confidence in today, gold represents confidence in tomorrow. For ordinary people, these trends may seem distant, yet they ripple through everything, from inflation and interest rates to the stability of markets and currencies. When central banks move billions into gold, it sends a message that even the most powerful institutions are hedging against the unknown. Whether or not gold ever touches $5,790 an ounce, its trajectory speaks volumes about how the world views money itself. The metal that once defined civilization's earliest economies is again at the center of a global story, not as a relic of the past, but as a reminder of what real value means. Disclaimer: This story is based on publicly available financial data and expert analysis. It is for educational and informational purposes only and should not be interpreted as investment or financial advice.